yo. What's going on? What's going on? What's happening, everybody? How y'all doing, man? Man, we having us a whole snow day here in Columbus, Georgia, man. Yeah, man. You know what I'm saying? We don't be getting snow like that in Columbus, Georgia, man. So we get us a snow day. We celebrate good time. Come on. We celebrate, cause we don't be getting no snow in Columbus, Georgia, man. Hey, how y'all doing? Who we got up in here? Y'all drop something in the chat so I can see who up in here with me. Don't tell me y'all. I see somebody had big ticks. You know what I'm saying? Shout out to gang out in Texas. They showed me they snowman. Big Tex. Big Tex look more like Lil Tex. Big Tex a little skinny. Big Tex a little skinny, you feel me? Big Tex look like Lil Tex.
You know doggone well that was mostly ice. Don't you just keep out here playing. We was working with what we had. We was working with
I,
what we had.
I see you, Big Tex. Yeah,
Down here stomping in the snow.
man. We had us a little snow day. We had some snow out there in the backyard with it. You hear me? Yo, man. Let me show. Oh, I ain't even showing y'all Big Tex. Let me show y'all Big Tex. Where Big Tex at, man? Let me show y'all Big Tex. There go Big Tex. Look at Big Tex, man. Look at Big Tex hanging out in the snow, man. Did be I'm out there. I went out there to make a snow angel. That boy was chilly willy out there in the backyard with it. Out there in the backyard with it. That's my snow angel there. That's how it came out. I put a little head, gave it a little circle for a head. It snow. I know it was gonna snow in Atlanta. I know it always snow in Atlanta. Even if we don't get no snow, Atlanta get the snow, man. But enough about the snow day, man. What's happening, man? Good afternoon, good evening, whatever you wanna call it. It's your boy, Timothy Lee Wright. Oh, wait a minute. Let me back up. The snow day got me messed up. Good evening. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, still want to say welcome. But give you a nice hearty, well, thank you for always pulling up to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spider if you don't hablo Espanol. And you are in tune to another episode of Le Intraday Price Action Recap. Yeah. Nah, man. Hey, we're going to go ahead and get right to it, man. We're going to get right to it. I ain't going to hold y'all up. Let me put the Discordia over here. Right. Let me plop that there so I can see the chat. Now I can see the chat. I can see the Discord. If you are in Discord and you want to unmute and say something, feel free to unmute and say something. If you're on the tube, feel free to drop something in the chat. Discord, I cannot see the Discord chat. I can see the YouTube chat, but I can't see the Discord chat. So Discord, if you got something, just unmute and say, Tim, I got something. All right, let's get to it, man. The intraday price action recap. All right, now, wait a minute. Before we get into it, man, I want to talk about something. Right? Today we was on the tape reading session with the members of the boot camp, right? And for those who don't know, I'm doing a boot camp for the whole month of January. The Art of Reading Price Action Boot Camp. We started January 1st, and we're going through the 31st. Right? We're in phase 2 now. Where we started tape reading from the beginning. Tape reading wasn't supposed to start until phase 2, but we've been tape reading from the beginning, and now we're in phase 2, where it's, tape reading, and we're moving into phase 3, really, where we're going to start talking about strategies and stuff. But we were on the tape reading session today, and it's supposed to be, the art of reading price action. We just supposed to be looking at reading price action. Right, but everybody and their mama always want to be talking about trading Everybody wanted, oh, trading, right? And I'm sorry, y'all. Somebody was texting me, talking about how big my kids are. Talking about how big my kids are. I'm sorry, but and a topic, not really a topic. Something came up that as new traders and and I hate to say uninformed, but not fully developed traders is something that we do, right? And what is that? We try to build our narrative from down up. We try to build our narrative like we building a house, right? When you build a house, you start with the foundation at the lowest level. You even dig underground and you put in like rebarb and stuff like that. You even dig underground to make sure the foundation is solid. But we can't build our narrative for trading from the ground up. So we can't go down here to this 1 minute time frame and start trying to build a narrative of what price is doing. No. We can't do that, right? And I want to point this out because this is important for everybody. This ain't just something that's locked behind a paywall for just the people in the boot camp. No, this is something that's important. This is something that I stress all the time. And I'm going to keep saying it until it get through everybody's head, because it took me a long time for this to click in my mind, right? You don't want to be on your entry time frame looking for, matter of fact, I'm gonna go full Discord. Y'all can't see my face unless you're looking at YouTube too, right? But I just want to go full screen with it just to say you don't, hold on. I wonder, can I do this in Discord like this right here? Let me see if I can do this in Discord like this right here. Yes, I can. Let me flip this around. Now you can see me, Discord. Now, Discord can see me. YouTube can see me. Listen to me. You don't want Discord. Can y'all see my face? Huh? Somebody say something. Okay. All right. You don't want to be on your entry time frame looking for an entry or trying to build a narrative if your higher time frames, your narrative time frame, structure time frame, entry time frame, if all the stars are not aligning, do not be on your entry time frame looking for a consolidation, an expansion, a raid on liquidity, a retracement back to a fair value gap. Don't be on your entry time frame looking for anything if it hasn't, your narrative time frame hasn't said go down. Your structure time frame hasn't said go down. Don't be on your entry time frame looking for anything. I don't care how badly you want to trade. Don't do it. Now, let's go to the charts so I can explain what I am talking about. Now, let me get back on the Discord on my computer. Now that I said that face to face with everybody, okay, so this morning when we came in here, was getting ready to look at price, right? Looking at this 4-hour chart here. I'm just going to a 4-hour chart because it makes it easier to see. And 4 hour is my, right? That's my narrative time frame, right? That's my narrative time frame. Okay. All right. I have a narrative time frame, a structured time frame, and a entry time frame. Right. So on my narrative time frame, right, we pointed out in the gang, we said, hey, price is consolidating right here on the 4-hour time frame. All we're doing is consolidating. And then I said, if you look to the left, you see how I just drew that arrow to the left right there? If I take a bow, right? If I take a bow, right, and then I get an arrow and shoot it, pew! Right? What did I hit? Can somebody tell me what I hit? If I take I'm gonna draw a bow right here. Somebody that's not in the boot camp, tell me what I hit. When I draw this bow, that's a bow, if you don't know, right? And then I'm gonna shoot an arrow. Pew! Right? What did my arrow hit? Pew! Pew! What did my arrow hit? Somebody tell me. Somebody that's not in the boot camp. Deborah, E-Rock, Jim, Yolanda, y'all in the boot camp. Y'all can't say nothing.
A bearish fair value gap.
We said price is consolidating right here.
Sorry.
Right? Price consolidating here. And then when I shoot my arrow, pew! Right? What am I hitting going that way? It has something to do with this right here. Right. What did I say price was doing right here?
Consolidating.
Okay. And when I shot my arrow, pew! What did price hit? Going through that same area. Back in there you go, Kim. Shout out Kim, pulling up with the hard hitting answers. A bunch of other times when price consolidated in that same area, right? So I said, hey, look at here. We're consolidating at an area that the algorithm loves consolidating at that. What does that now? What does that tell you about this area? No, not at the end of the arrow. Ain't nothing over there. Right? What does that tell you about this area right there? The algorithm considers this to be an area of what?
High resistance.
Nope, not high resistance. Where does price
Fair
typically?
value.
Fair value. Very good. The algorithm considers this price area. This is an area of fair value, right? What happens at fair value, right? Price tends to do what at fair value? Keep talking. Price does what at fair value? Price does what?
Consolidate.
Consolidate. Was that a question or was that a statement? What was that? Was that a question?
Statement.
It didn't sound like. Say it again.
Consolidate.
Nah, There ain't no statement.
It consolidate.
There you go. Are you sneaking on the live at work? What you doing? Is Sharon taking a nap?
My phone is about to die.
What's Sharon taking a nap?
Computer.
Sharon taking a nap. You can't talk that loud.
Yeah, he taking a nap.
Wake up, Sharon. Hey, check it out. Right. So if price is consolidating, do we really want to be looking for entries? If price is consolidating, do we want to look for entries or do we want to sit on the sideline? Right? If you think we should be looking for entries if price consolidating, put a 1 in the chat. If you think we should be sitting on the sideline waiting for price to tip his hand, put a 2 in the chat. Right? Ready? Go. What you want? What you gonna do? What you gonna do? All right. I ain't gonna say what's up to everybody. What's up, Rhonda Green? What's up, Here to Learn and Share? What's going on, Kim? What's going on, Kashaya? What's up, Deborah? What's going on, E-Rock? What's going on, Jim? What's happening, Yolanda? What's going on, Wells J-Rock? Right? We're going to sit on the side if price is consolidating. Right? So now, if this right here is our narrative time frame, right? This is where we're getting our narrative from of like, what is price trying to do? And if this time frame is consolidating and we're saying, hey, I need to be sitting on the sideline, right? Then we don't need to be down here on the 1 minute, right? On the 1 minute here. Let's find this over here. Let's go over here and find our 9:30. Man, let's do it like this. All right, let's highlight our New York morning session. All right, so our New York morning session would be 9:30 to 12 right there. Right? So boom. Here's our New York morning session right here. All right? This is our New York morning session. Okay? Now, if your narrative time frame says that prices just consolidating, right? Prices just consolidating. That's all we're doing, right? And then let's see if we can just put something on the chart just to have something to look at, right? Okay, so I already got it on the chart, right? So this is the high and this is the low for the entire daily range up until this point, right? The entire daily range up until this point. And you say, well, Tim, it's stretching over to another day because this was like a holiday. So the price getting weird. But this is all 1 day, right? So this is the high and this is the low of the daily range thus far. Okay. So let's go here. Let's do this. Let's put a Fibonacci tool, right, on the high and the low of the day so we can see exactly where we are when we're looking at price on the lower time frame. Okay. And on the hourly time frame, we got a nice little low here. All right, we got a little low there, so we'll put a low there. Sell side liquidity on the hourly time frame there. And then we got a high up here. Right. We got a high up here. This is the London high, right? This is a London high right there. We're going to put like buy side liquidity. All right, and then we'll put it on there so we'll know that that's the London high. Meet me at the London high. Buy side liquidity London. Okay, so now we got some information on there. Right now, we're going to go down to the 1 minute. Right, we're just going to go down to the 1 minute time frame, and we are going to look at the New York. Right, we're looking at the New York session. Now, looky who stole the cookie. Right, y'all remember what this little line right here is? This black horizontal line right there. What's that black horizontal line? Right, somebody tell me what that black horizontal line is right there. What is that there? See the little dotted line here. Then you got that little black horizontal line there. What's that little black horizontal line right there? Right. Why do we put that on the chart?
I'm not sure, but looking at the fib too, that's looking like 50% of equilibrium or
equilibrium. Very good. Equilibrium. Right. That's equilibrium. Okay. So now looking at price, we said that our higher time frame, right, our narrative time frame, which is the 4-hour chart, right? So the 4-hour chart is consolidating, right? We're going to put a C. The 4-hour chart is consolidating, okay? Meaning the 4-hour chart is hanging out somewhere at some piece of some place of fair value, okay? Now, coming here into, as we get ready to go into the New York Open, right here at 9:30, just prior to that, right? Remember what we said this high was right here? We said that was the London high. Just prior to coming into the New York Open, price engages the London high and then starts to reject off of it. Okay? So if price engages the London high and start to reject off of it, right? Now, if you reject the high, what's your expected draw, right? The logical draw can be the low that sent you there, right? This low sent us there. We rejected off it. So that can be your logical draw. Now, you're taking out a session high and you're rejecting off of a session high. So since it's a session high and you're rejecting it, not only can you say, hey, the likely draw can be the low that sent me there, but it can also be the low of that session, right? The low of that session. And the low of the London is right here around midnight, right? So our midnight open. So now you got a draw there to the downside, a draw here to the downside, and then that sell side that we saw right there that we marked out on the hourly time frame. Okay, that's what that red line is in there with the what's the name, right? Bear with me. We going somewhere with this. So as the New York opens, right, price quickly, right? Price, we come here, we poke up into that fair value gap. Don't take out that high, showing that the sale program is still intact, right? And then we drop, right? Drop it like it's hot. Boom! Right there, right? Drop it like it's hot. Coming down below the midnight open price. Okay. Move back up into the premium of the range, right? Move back into the premium of the range. And then we, boom, we tap the sell side, right? That we was looking at, right? Okay. That we've hit the London low. And now we've hit that sell side that we marked out. Okay. Now, whenever price displaces away, right? Whenever price, we're going to come here from, we're just going to start at the high of the New York session, right? Whenever price displaces away, boom, we displace down. Where can you anticipate price to come back to at a minimum, right? Where can you anticipate price to come back to at a minimum when it displaces away?
Discount.
No, equilibrium. Good job, Kim. Good job, Kashaya. You want to see it come back at least to equilibrium, because if you're bearish, you want it to come to a premium, but you want to see it at least come back to fair value, right? If you're bullish, you want to see it come to a discount, but you want to see it come at least to fair value, because equilibrium is fair value. You want to buy it in a discount or sell it in a premium, but you want to see price at least retrace back to a fair value. Okay, so we came back to a premium here, and then we expanded down, right? We expanded down. So now inside this leg here, we've extended an additional one, but since we didn't take out that high, now this range here, right, is broke up into two different legs. Okay, right? So now on this leg here, right, we come back up into a slight premium and we expand down again, right? We didn't take out that high. So now this leg right here is broke up into two stages. But these two stages are a part of this stage up here, right? So now, let me take all this junk off chart so you can really see. Take that off of there. And want to hide. Nope, I need that. All right, I'm going to I'll hide the new day opening gap. Don't need the Fibonacci tool. All right. Don't need really don't need this. Hide that. All right, really don't need this right here. Hide that. Just hiding the stuff we don't need so it just don't look so junky. We don't need the daily high. Okay. All right, that's good enough. There. So, we did need that Fibonacci tool, right? So we said this was from the 930, and then so we just extending this down all the way through because this is one big range that we're trading, but we just continue to extend it. We got this one big range that we're trading, but we it's broke down into several different price legs, right? This whole range is broke down to several different price legs, right? So the higher time frame is just consolidating, right? On this 1 minute, we've traded down and we've taken out liquidity, right? We've traded down and we've taken out liquidity. Okay? Here. Now, whenever we expand away, right? What do we anticipate price to at least come back to? Right? What do we anticipate price to at least come back to? Equilibrium. Right? Equilibrium. Now, this was brought up. This is why I went through all of that. This was brought up inside the boot camp. Hey, Tim, does it look like we're setting up? Does it look like the surge is setting up? Does it look like a buy setup is forming? I said, no, it don't. Right? No, it don't. Without even thinking about what the 1 minute chart was doing. Right? Can anybody tell me why my first reaction was no, it don't? As soon as they said, do it look like a buy, a buy is setting up? And I ain't even looked at the 1 minute. I just said, no, it don't. Can anybody tell me why I said no, it don't? Based off what we already said, we already talked about it. Right? We already talked about it.
Why was higher time frame narrative is consolidating?
Shout out to Kashaya, shout out to Jim, because the higher time frame is just consolidating. So without even looking at what the 1 minute is doing, I already know ain't no buy setting up. Because why? What do we need to happen? We need for our higher time frame to be telling us it's trying to do something. We need for our structure time frame to trade into an anticipatory reactionary point, and then that's when we go to our entry time frame and start looking for a surge, start looking for a curve, start looking for a liquidity run, start looking for a displacement, start looking for, we need to have the evidence of institutional sponsorship in place before we even start looking for an entry. If we've already said the 4 hour is just consolidating, right? My draw on liquidity, who remember what we said our draw on liquidity was? Right? Who remember what we said our draw on liquidity was? Huh? Can anybody remember what we said Picasso lived?
London low.
Nope.
No, you were saying, I think it was the high that sent us there. I don't,
The London low.
exactly.
Our draw. What was our draw on liquidity? What did somebody ask me last week?
Last week.
Empire Trades. Remember they said, hey Tim, what about? But y'all don't remember nothing. Y'all don't remember nothing. I'm so disappointed.
The London low.
If you say London low one more time, you London.
Oh, my fault.
say our draw on liquidity was? Here, like let me shrink it up like this to help you out. Right? What did we say our draw on liquidity was? The previous smart money reversal from the sell model. Y'all give it up for Kashaya, man. This high right over here. This high right there. We said that's our draw on liquidity because we said this was our smart money reversal for this market maker sell model, right? And then we said since this was the smart money reversal for the market maker sell model, and we said, okay, this was our smart money reversal for a market maker buy model. And when we look back through price, we said, okay, this appears to be our initial consolidation. So if this is our initial consolidation, then our draw is the buy side above that initial consolidation. So if my draw on liquidity is there, that means that I'm looking for reasons to buy. Why am I looking for reasons to buy? Right? Why am I looking for reasons to buy? Somebody tell me. Why am I looking for reasons to buy?
Because we're on the right side of a buy model.
We're on the right side of the market maker buy model. Very good. Right? Shout out Jim with the hard hitting answer. Right? We're on the right side of the market maker buy model. So if I'm looking for reasons to buy, right? All of this stuff that we talked about, the market wanting to draw into this sell side, that don't mean a hill of beans to us because I'm not looking for reasons to sell. Now, you can sell against the grain, and I'm not going to get into all of that selling against the grain right now. We done talked about it a million times, but since my draw is up there, I'm looking for reasons to buy, right? So while the market is in a sell program, right, in the midst of a higher time frame consolidation, I'm not trying to predict the reversal of this sale program starting at the 1 minute. I need the higher time frames to start to show me, okay, I'm ready to offer a buy setup, right? So with all of that in mind, we've come down here and we've taken out sell side liquidity here. Once price expands, right, you can anticipate it to retrace back to where? At least equilibrium, right? This is equilibrium of this range, right? So around this time here, right? Around this time here, I think it was around this time here is when I was asked, Tim, does it look like a buy is setting up? And I just said no, because we are in a higher time frame consolidation, right? Our structure time frame has not traded into an anticipatory reactionary point that says, hey, start looking for an entry, right? So we don't even need a 3. Right. So if we look at our 15-minute time frame, OK, if we look at our 15-minute time frame, this right here is what the 15-minute has done. Right. The 15-minute, all it has done is come down and sweep this liquidity right here. Right. That's all it's done. It hasn't traded into anything over here. Right. That we got marked out as an anticipatory reactionary point. Right. Why is that? Because the 4-hour time frame, right, the only thing we're doing is just consolidating. We're just right here consolidating. That's all we're doing. There's nothing over here that we're looking for any kind of reaction off of, right? So it's just consolidating. We're just chilling and waiting, okay? So now let's go back and look at, right, what price is doing. Okay. That's the whole reason why you don't want to be doing it. But right here, when you come here at this time, right, looking right here, hey, do it look like something is setting up right here? No, it don't. Right. But look, we went up and we took out a high. I don't care. Where are we? right? Right here, and we come up and take out this high, right? Let's do this right here. All right, boom. Right there, right? Because it's easy to see it when it's over there, but when you're looking at it like this right here, now you be like, oh, now I can see what they saying. Now I see why, you know what I'm saying? We done came up, you know what I'm saying? We done made some inversion fair value gaps. We got a break in market structure. You know what I'm saying? We got all that good stuff. I can see all of that right there, right? We taking off, we displacing up. We got inversion fair value gaps. We got break in market structure. We got change in state of delivery. We got all that stuff, all that bullish stuff. But guess what? That's all based off of this 1 minute with no support or input from the higher time frame. No support or input from the higher time frame. It's okay to look for this right here if we had traded down, if this low right here was like a 4-hour area of liquidity that we was looking to sweep and go back up. If this low right here was combined with a higher time frame fair value gap where we was anticipating it to support price, if this low right here had ran into like a daily order block, something that we expected price to just bounce off of, not just trading into the middle of nowhere and then just hanging. No, right? If it had traded to something that we were looking to react off of, then it's okay to come to the 1 minute and say, I got consolidation, expansion, reversal. Now I'm looking for a retracement and a delivery. It's okay to do that then. But when you're just trading to the middle of nowhere, right? What do we anticipate price to do when it comes to equilibrium? What do we think price? What will price typically do when it comes to equilibrium? Right?
It'll consolidate.
It'll consolidate. If price is going to be consolidating, do we want to be in a trade? Do we want to try to enter a trade, or do we want to be in a trade if price is just going to be consolidating?
No, we don't want none of that.
We don't want none of that. So, therefore, without any support from your higher time frames, when you see this 1 minute coming back to equilibrium, right? You're not looking to try to place a trade, because now we're just anticipating price to just hang out here. Why are we anticipating price to hang out here? Because this is equilibrium, right? And our higher time, what is our 15-minute time frame? You know what I'm saying? What is our 15-minute doing? Right? Our 15-minute, we consolidated there. Right, we're right back in this area, and we got overlapping candles now. So the 15-minute trying to consolidate there, right? So the 15-minute like hanging out here. We even look farther over this way, right? Consolidate. The 15-minute like hanging out right there, right? This is an area that it loves to consolidate in, right? It's think that's fair value, and we don't have anything supporting us to tell us we from the bus up out of there, right? On the 4-hour time frame, right? The only thing we've been doing is just consolidating in this same little range there, right? This same little range. Remember, this is our fib tool that's the range we're looking at, but price is just in that same little range, right? Wicks doing all kind of damage, but price just hanging out in that same little range, right? So if the 4-hour is consolidating in this range, the 15-minute is consolidating in this range, right? Why are we jumping to the 1 minute trying to look for a reason to bust out of this range, right? This is the number one problem that all of us ICT traders have in the beginning, and some of us never let it go. Right, we're always trying to pick that 1 minute entry and catch the bottom or the top of the reversal. And this how we get sliced up every single time. Right? And right here, when this was asked of me today, I said, no, it's not. No, it's not. Nothing is setting up. We just consolidating. We ain't doing nothing. And then look at what happened, right? Look at what happened. Let's go here. Right. Let's go here. And let's get over there to our area. Look at what happened for the rest of the New York morning session. Where do we hang out at for the rest of the New York morning session? Right there at equilibrium. right there at equilibrium. We didn't leave that equilibrium until lunchtime, right? And then when we left that equilibrium at lunchtime, okay, then we go up to our 15-minute time frame. This is our structure time frame, right? This is our structure time frame, okay? So on our 15-minute time frame, where in the morning we came down, right? We poked that and we came down and took out the sell side, right? And then we immediately rejected it, hung out here for a while consolidating, and then right here at 11:45 we displace away, right? And then we create a fair value gap right there. Now we got a fair value gap and a bullish order block right there, right? So now this is our structure time frame that has given us some type of market structure, right, that we can start to look at, right? And what do we call these areas of interest there? What do we call them areas of interest? We call these what? What do we call these areas of interest here? Anticipatory reactionary points. Very good. Very good. Okay. So now that our so I'm going to put a line here. Everything, right? Everything to the right of this vertical line is after our anticipatory reactionary points have been formed, right? After our anticipatory reactionary points have been formed. Now, let's go down to our 1 minute time frame. And why are we going to our 1 minute? Right? Why are we going into our 1 minute? Right? Why are we going to our 1 minute time frame? Because on the 12, 15, 16, 17, on the 12, 18 candle, price traded into our anticipatory reactionary point. Right? So when price trades into your area that you're looking for something to happen off of, that's when you come to your 1 minute time frame. If you trade like me, now you're going to be looking for a signature that allows you to get long in this case, right? Or get short if you not. And looking at this right here, this is a beautiful example of how to properly use a turtle soup, right? This is how you properly use a turtle soup, because you look here and you see that on, let's come here, right? Let's do this first. Let's take this off. Boom. Right? Let's go to our 15-minute time frame. So on our 15-minute time frame right here, right, we displace away, right, expand aggressively, right, close up here with an opportunity to create a fair value gap this big, right? We close with an opportunity to create a fair value gap that big. The next candle opens up, trades down, and we create a fair value gap this big. Okay. Now that we got our fair value gap, we have our change in the state of delivery, right? This bullish order block, that's our change in the state of delivery, right? We got our fair value gap. So now, as this 15-minute candle closes here, right? So now, while we're watching price, because you can watch them on dual screens, right? Let's go to a 1 minute time frame. Okay, and now we see that we have, come here. We see that we have a swing low sitting right here below this area of consolidation. And that swing low is sitting right on top of our anticipatory reactionary point and just above our change in the state of delivery, right? There's also a 1 minute bullish breaker over here, right? And actually that'll be, for the way I look at it, right, it'll be a mitigation block, right? But for some people, it'll be a breaker because we took out that low right there and made a higher high. But for me, right, I'm looking at the bullish mitigation block because I'm looking at this candle right here, right? That candle right there, because that's the candle where we extended up. The move was going up, then the move came down, then the move went up, and we didn't take out that low. Okay, however you want to look at it, they're all in the same place. Who cares? It's all on top of this balanced price range where price should not come down because we offer buy side, 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 buy side, buy side, side, and then we left that area. So now we got a balanced price range there. So we got a balanced price range. We got a anticipatory reactionary point, a change in state of delivery, and then we see a swing low sitting right here. If you are a turtle soup trader, this right here should have you chomping at the bit. Why is that? Because you can buy this low as soon as price touches it, and you have a defined amount of risk that you can take, right? Based off of PD arrays. You got a fair value gap, right? You got a breaker / mitigation block. The low of that candle, the low of that candle, whichever one you're using, if you're using that low or if you're using that low, right? You got defined places where you can put your stop and still enter in on a turtle soup. Why am I saying you can enter in on turtle soup? Because if you are bullish, right, what gives you the best opportunity of entering? A curd or a surd? Which one gives you the best opportunity for entry? Hello? Can
I
you
like
hear
the
me?
one with the one R.
You like that one?
Yeah.
Okay. Ain't nothing wrong with liking that. But which one gives you the best opportunity for an entry? That one there, right? And who can tell me why this one gives you the best opportunity for a entry? Why is that?
Because you get more chances since you got to retrace and then reverse. Just giving you two options, maybe.
Okay, but and when it got to reverse and retrace, what's happening? What's happening to give you that extra opportunity? All right.
I'm not sure.
Think about the noun and the verb. What's the noun? What's the thing that we call the noun?
Power of 3.
Power of 3.
I'm trying to hit the mute button.
Power of 3 is the noun, right?
Yeah.
What's the verb that makes up this noun? The verbs, should I say? What's the verbs that make up this noun?
AMD.
AMD. Okay. So what part of this gives you the best opportunity?
I guess the manipulation.
The manipulation. That gives you the best opportunity to enter, right? And where is that manipulation happening, right? Where's that manipulation happening? That manipulation is happening when you go and engage the opposite direction, when you expand in the opposite direction, right? So the manipulation is happening here, right? This is where the manipulation is happening in this one here, right? With this one up here, there's no manipulation happening, right? Because you've already manipulated somewhere else. But when it plays out like this, when you get consolidation, expansion, right, and you're bullish, there's your turtle soup right there. You buy that low because now you got a defined risk that you can put in. I want to put it below the fair value gap. I want to put it below the janky breaker. I want to put it below the mitigation block, right? I want to put it below whatever you want to put it below. You pick you got a defined area that you can manage your risk by just buying as soon as it sells below that low right there. Okay. And then we put some more meat on the bone, and then we see that it came down to consequent encroachment of the anticipatory reactionary point, came back into the change in the state of delivery, right? And for anybody who don't know what the change in state of delivery is, that's the price that the algorithm is looking to buy right there. The opening price of that for that highest down close candle. That's the price that the algorithm is referring to as the change in the state of delivery, right? So you can say, I just want to buy the change in the state of delivery. I want to buy the stops right below that low turtle soup entry. You know what I'm saying? That's a beautiful way, because anytime you're looking to go up and price starts consolidating, right? I always wait to see if I get a raid on liquidity. Now, you won't always get the raid, but if I look to see that I get a raid and it's at my anticipatory reactionary point, now when we start to move back up, right? When we start to move back up, like see how we made this fair value gap right there, right? When this candle did not drop down into the fair value gap, right? I will just buy it inside that order block. Anything inside these candles over here, I'm buying it inside that order block right there, right? Because price is refusing to drop down into the fair value gap. I'm buying it inside that order block. I'll just buy it inside there, right? If I'm waiting here and price comes down, don't get me, then it open up this next candle, come down, and it's just closing right there. I'm buying inside the order block. I'm not waiting for it to come back down here no more. Right? Either that, or if it won't come and get me there, either that or I'm going down like lower than 1 minute, right? I'm going down lower than 1 minute and looking for something I can enter in on, right? Right there, how we traded back down into that 30-second fair value gap there, right? We never came down. We never came inside the 1 minute, but we came inside of this 30-second, right? Boom. You're going to give me something, right? You're going to give me something. I'm going to look for something. Why? Because we've already got our consolidation, right? We trade down into our anticipatory reactionary point, right? And now we're starting to displace away. Right? And you say, Tim, what do you mean we're starting to displace away? Because now on this 1 minute time frame, since we are trading into a 15-minute time frame, right? We got a 15-minute bullish fair value gap. We got a 15-minute change in the state of delivery, right? When we trade below this 1 minute sell side liquidity, right? And we close below it, right? We trade below the 1 minute sell side liquidity and we close below it. Then when we reverse off of this 15-minute PD array, and there's also a 1 minute PD array right there. Let's not leave him out, right? Once we trade back up here above that opening price right there, right? What is that opening price now? That opening price is a change in the state of delivery that you can trust. Right now, you can trust consolidation, expansion. Right now, you can trust this is looking like a reversal. Why? Because we got a change in the state of delivery here. We got a down close candle that took out liquidity at a higher time frame PD array, and now we've traded back above the opening price of that candle. Boom. That's a 1 minute change in the state of delivery that I can trust now. Why? Because my draw is up there somewhere, and I've come into a higher time frame discount PD array that I'm anticipating to support price. So now I can be on this 1 minute looking for consolidation, expansion, reversal, right? And I can use any of my tricks to get in. Whatever I use to trade, I can use any of it to get in, right? All of the stuff that I talked about over there already. And then what else we got here, right? And price is not really trying to slow down, right? Can somebody explain to me why price is really not trying to slow down? Can somebody explain to me why price is really not trying to slow down in this area right here?
Are we at a macro or at the beginning or something?
When we look back this way. You're looking back over there. When price,
I don't know.
what's happening over here? What's happening over here? What kind of delivery is this?
Efficiently delivered.
That's efficiently delivered. And then we left that area right there. When we leave that area, so now that's a balanced price range right there. If you bullish and you're below a balanced price range, what do you want to see price do?
Cut through it.
Cut through it. Get out my way. You ain't got no time for no bunch of retracing when you're supposed to be cutting through that balanced price range. Get on through there. Get on through there and give me what you owe me. Give me what you owe me. Get on through there. Right? So we get on through there. Okay? Right? We get on through there. Right? And once we get through there, we come down, trade back down into an imbalance, right? Respect the balanced price range. And then once we respect the balanced price range, we trade up, right? We trade up here, set a relative equal high. But what do we trade above right there? What's that right there? What kind of high is that right there?
Intermediate.
That's an intermediate term high. When we trade above an intermediate term high, what do we anticipate? What kind of retracement?
A deeper retracement.
A deeper retracement, right? So when we trade above that intermediate term high and we come up here, we set relative equal highs and we start breaking down. Now we're anticipating a deeper retracement, meaning we're looking to take out short-term lows. Right? We're looking to take short-term lows out. So we come here, we start to break down, right? We take out short-term lows, right? And then we come down, right? And then look where we're stopping. Look over here, right? Look where we stopping, right? You see there? See that consolidation there? See that consolidation there? See that consolidation there? We're stopping right back there at that old infamous balanced price range that we should be using that support, right? It's a deeper retracement, but we're still stopping. Stop, boy. Don't you go no further. Don't you go no further. Put that there, right? And then we're going to come over here like this right here, right? And then we're going to stretch our way over here. And then if we look right over here, right, we traded down here, right? We came here. That right there is the last up close candle inside of a bullish order block right there, right? And we look over here, right? We traded down into a bullish order block right there, right? And it's a little sloppy. We overshot it a little bit, right? But you're looking on, right? You're looking back over the market maker model, right? Right? You're looking back over the market maker model, right? Looking over the different sides of the curve, okay? So when you're looking at this side coming down, right? You look back over to this side of the curve there, right, you trade it into a bullish order block, right? And then if you keep looking further, just to show that the PD arrays never go stale, right, you're trading into, right, a bullish order block, right? What does the bullish order blocks signify? A place where the algorithm wants to buy, right? So we traded down into bullish order blocks at some areas of distribution and accumulation, right? That's what they mean. That's what Michael teaches about a reclaimed order block, right? You're coming back and you're reclaiming. When you get above, right, that old bullish order block, you come back down and you reclaim that order block when you're on the opposite side of the market maker model, right? You reclaim that order block. And once we came back down and reclaimed that order block, boop, right? What did we do? We took off, went back up, right? All the way up here at like 330 there and traded right back to, what is that right there? What is that right there we have there? Right, traded right back to the first presentation fair value gap of the afternoon session. Right, Tim, it's so little, it's so tiny, it's such a small fair value gap, but look where it traded to, right there to the consequent encroachment of this wee little shrimp of a fair value gap right there on that 135 candle, the first presentation fair value gap in the afternoon, right? And then guess what it did? It went back down and hit you with what us around here like to call the snatcher of the wigs, right? So if we look here, right here at the 2 o'clock open, prices consolidate in here, right? We take off in the right direction, all right? We come back down and run them stops, leave this right here. Don't take this stop right there. Right? Why don't we take that stop? Because this is when we came back down and reclaimed that order block when the algorithm was ready to go up. So we left that alone. We're not going to knock ourselves back out the trade. We're just snatching wigs. Right? So once we come back over here and snatch all them wigs. Uh-oh, I deleted the wrong stuff. All right, get rid of all these brushes. Right? Once we come over there and we snatched them wigs, came up to the first presentation fair value gap, dropped back down, snatch wigs, and then we start to make our way back up again, right? Got to change state of delivery, trade back down into the fair value gap, and then guess what we do? We run out of time, and then after 4 o'clock, once the market closed officially at 4 o'clock, but still during the, the post-market session, right? Price takes off like a rocket. Pew! Right? You see how dirty they do you, right? They do not give it to you during the regular trading hours. So when 4 o'clock hits, takes off like a freaking rocket, going straight to that buy side liquidity that it's been flirting with all day long. Right? Then once it hit that, then it pulls back off and closes off the high. Why? Because that's where the distribution is taking place inside of the accumulation, manipulation, and distribution. Right? Does any of that make sense? Does any of that make sense?
Yes, it.
Well, it made sense to Jim. All I need is one. All I need is one. Everybody else, get off my live. Y'all got any questions for me? Y'all got any questions for me? Can you explain when to look
You
2
might have
time
discussed
frames
this,
down versus when to look for a closure on the same time frame if you have time? You look 2 time frames down. What do you mean when to look 2 time frames down? I'm not getting that. Cause you say versus to look for a closure on the same time frame. I'm not. The other person go while I try to figure out what here to learn and share asking. What was you about to say?
Uh, you might have. I came on a little late this morning. I don't know if you discussed it, but how do you determine on like this holiday? It's a little weird. The previous day high and low because it
Did
looks
it?
like they combined Monday and
Got him.
Tuesday.
uh, it's just I talked about that when we first started the stream this morning, but I said it's a little weird because the 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 algorithm is actually trading, even though the mark is like a holiday. So all I do is mark out the new week opening gap based off of um the first open price, which is going to be Sunday at 6 o'clock, right? So from Friday at 5 to Sunday at 6, right? That's how I mark it out. Micah talked in the past about how with holidays the gaps be like a little weird, and it be like certain he might look at the Sunday gap, he might ignore the Sunday gap and look at the Tuesday gap, or it be I don't even try to dig that deep. I just look at right what's based off of the actual candle that is making, right, which is going to be Sunday's open, right? And then once you get into like the intraday time frames, right? Now I see that then I'm like, okay, this is where let me get this stuff off of here because it drives me crazy. Right. Now I'm looking at it and I say, okay, this is where Sunday started trading here. So we had that weird piece of Sunday day, right? And then it ended Monday at sometime. I think it ended at like 1. Yeah, it ended at 1 on Monday, and then it opened up Monday night at 6, right? And then went through today. So I was using this high right here and this low right there as the high and low for the day, even though it stretched across 2 calendar days, right? It was just, this is just the two, all of this is just the Tuesday candle, right? Because it's going from Sunday night at 6 until Tuesday night at 5, right? And it's just one candle for Tuesday. So I just used the new week opening gap from the first price on Sunday, and I just used the high and the low until we create a new high and low. If we create a new high and low in the New York session, you see what I'm saying? If the New York session make a new high or low, like how it poked above right here, then I'm going to move that. That's going to be my daily high. That's going to be my daily low right there. Did I answer your question?
Yes, thank you. Because I was trying to mark it out, and I was like, this is ending up weird. But okay, I knew I had missed a little bit this morning. Thank you.
So, and because if you try to look at, all right, if you try to look at where price opened on Monday evening, right? Price opened here on Monday evening, right? And then if you try to take that back to when it closed on Monday afternoon there, right? So now you're looking at this price right here, but this right here is not connected to Friday, right? If I go to like a daily candle, right? Now Friday closure is down here, right? But when Monday night / officially Tuesday opened up, it's all the way up here. You see what I'm saying? So if you ignore everything that happened on Sunday, right, then you would have a new week opening gap that's this big. You see what I'm saying? If you ignore all of Sunday's price action, right? If you ignore all of Sunday's price action, your new week opening gap will be that big. And for me, that just don't make sense in my mind. So I just look at the regular new week opening gap, because when I come back later and try to mark it on my chart, you know what I'm saying, this is all that's going to be marked right there. Because of how the market open and close and open and close and open and close during the Globex time, while our indexes, our trading day is on a holiday. All right. Hopefully I didn't confuse nobody. There are times that you say we need to go down 2 time frames. We always look 2 time frames apart. There are other times when you say you want a closure on X time frame. I really don't. I honestly don't care about what time frame the closure is on, right? Because for the use of the PD arrays, the closure has nothing to do with the use of the PD arrays. You will hear people on Al Gore's internet all the time preaching, if we close beyond this candle, that makes it an order block. If we close beyond this candle, that means that displacement is happening. If you close beyond, that's just a whole bunch of baloney. Michael has said himself, the closure has nothing to do with it. It's offering the price. If the algorithm offer that price, then that's what it is, right? If it's in line with the narrative of what price is trying to do, right? He said all the time, if the algorithm offers that price, and people still ask me almost every day, do it got to close up there for it to be? If the algorithm offers that price and it aligns with the narrative of what price is trying to do, as soon as you offer that price right there, that's a bullish order block. As soon as that happens, right? Now, there's other steps that confirms that that's a bullish order block, but as soon as that happens, that's a bullish order block. If it's supposed to be a bullish order block to support price in a narrative of what the algorithm got going on, as soon as it offers that price, the algorithm knows that that's a bullish order block. It's going to go do whatever it's got to do, like you see right here, right? Then it trades down right back there to that bullish order block and pushes up on this daily. These are daily candles right here, right? As soon as it offers that price, that's a bullish order block. It has nothing to do with that closure right there, right? Nothing to do with it. Then it come back down to that bullish order block and it push back up. And this is on a daily chart. Price fractal, take it on down. But we always look 2 time frames apart. And to look in the 2 time frames apart, that's building your hierarchy or your chain of command, if you will, right? If you want to trade, if you want the 5 minute to be your entry time frame, right? If you want the 5 minute to be your entry time frame, then your daily time frame need to be your narrative. Your 60 minute need to be your structure, and then your 5 minute will be your entry. Meaning, right? Your daily, that's your narrative. You're trying to figure out what the daily chart trying to get to, right? And then you decide to say, hey, the daily chart is trying to get to Picasso house. Picasso live right here, right? So if Picasso live right here, come here, Picasso, wake your butt up, right? If Picasso lives right here, okay, now, right, you know, okay, that's where the daily chart is trying to get. So then you looking to see, is there any PD arrays I need to mark out on this daily chart that I want to support this idea? In this case, we've already traded down to the order block, right? There's nothing else for us to mark out down here right now, right? Because we traded to the order block and we pushed up, right? And we're right there neck and neck with it. So now we go to our 60 minute, right? We go to our 60-minute time frame. This is our structure time frame. Okay. So based off our structure time frame, let's go back to our daily, right? Based off our structure time frame, this is our, let me just take this line here, right? That's our order block, right? And then we're going to mark out the wick, right? Because we like to see that sensitivity in the wick. All right. So we mark out the wick of our order block, bullish order block. and I'm not going to extend it. Right, so I got a bullish order block, right? And so we go to a 60-minute time frame, right? And on our 60-minute, on our structure time frame, right, we see that down here inside our order block, right, we have this huge bullish breaker right there in line with our order block. Inside our bullish breaker, right, we got a bullish fair value gap right there. Let me mark everything out for people who can't see it. Right, so bullish fair value gap, 60-minute, don't want to extend it, 60-minute, don't want to extend it. So 60-minute, fair value gap, bullish order block on the daily, right? And then we got a bullish breaker right here on the 60-minute, if I can get it on the right freaking candle. There you go, right there. Oh my goodness, come here, get up there. So bullish breaker on the 60-minute. 60-minute, don't want to extend it. 60-minute, don't want to extend it. So now on our structure time frame, right, price is up here and we start to trade down toward our daily, right? This is our daily. This is the price. This is our order block opening price. So that's the price that the algorithm is more than likely seeking, because that's the opening price of our order block right there. Let me change that from sell side into order block open. Bullish order block open, bullish order block open, right there. So that's our bullish order block open right there. So that's the price that the algorithm is seeking for buy opportunities. Okay, this is a daily order block. All right, so on our structure time frame, right, we trade down into our 1 hour breaker, right? We trade down into our daily order block wick. This is the wick of the order block, and then this is our order block price, right? So we're looking for sensitivity here, right? And if we don't get the sensitivity here, then we don't want to see it digging too deep. We want to see it touch this price and get up off of it, right? So we come down into it, right? And we close below consequent encroachment of the wick, right? Remember, this is an hourly, right? This is an hourly candle, right? And it's a daily order block, right? So we come down and this hourly candle closes below consequent encroachment of this wick. It also, right, trades beyond this low here where we already traded into this bullish fair value gap, right? So now you're looking for the price, the opening price of the order block, right? And maybe the order block on the hourly, right? Right, the order block on the hourly. But you also have this huge order block that this smaller propulsion block is inside, right? So let's mark out that order block price right there. And then we mark out that order block wick, because we always want to see the sensitivity in the wick, right? We always, God dog it. We always want to see the sensitivity in the wick, right? So we come down, right? We're not really getting the sensitivity in the wick of the daily order block, right? Now we're focusing on, right, what's going on with our, right? We come down to mean threshold of our breaker, right? We come down to mean threshold of our breaker, but then the next candle, when the next hourly candle open up, we continue down, right? So now we still don't have, we're trading into this here. We traded down into this, but while we're watching this, right, at the same time, we're watching our entry time frame, right? Why are we watching our entry time frame at the same time? Can somebody tell me why we watching our entry time frame at the same time? Can anybody tell me why we watching our here to learn and share? Why are we watching our entry time frame at the same time right now? No, not validation or invalidation. It's because our structure time frame has traded down into our anticipatory reactionary points right here. Soon as it traded, God dog it. Did it just crash? Did it just crash? Did it just crash? Got to be more careful. The Fed's watching. The Feds are watching. And it's only the NQ. It's only the NQ on that tab. Right? So it's because our 60-minute has traded into our anticipatory reactionary point. So whenever, right, your structured time frame trades into your anticipatory reactionary point, now you're on your entry time frame looking to see if it gives you a setup, right? So we put the 5-minute, put this on 60 minutes here, right? So this 60-minute time frame here, right? And then if we, let me put my crosshairs on, right? You see here, when the 60-minute candle trades down into it here, this 60-minute candle, like on this 5-minute time frame, when it comes down into there, you see what you see is this candle right here, right? So when it's 5-minute, when the 60-minute trades down, as soon as we get here, right there, as soon as it trades there, now we're watching this 5-minute time frame to see if we get anything set up. And while we're watching this 5-minute time frame, right, we're looking for sensitivity inside this wick right here, right? So when we come down, right, we close below consequent encroachment, and then we touch whatever we said that was, mean threshold of that 60-minute breaker, right? We touch mean threshold of the 60-minute breaker. The next candle opens up, right, and it trades down, right? This 5-minute candle over here opens up, trades down. Let me spread this out some so you can see it. All right. So the next 5-minute candle, right, it opens up and trades down. Where does it go? It goes down there to the wick of that 60-minute order block over here. Remember we said we had a huge order block with a propulsion block inside of it. So since we're trading down, we're anticipating price maybe coming to the propulsion block, right? But remember, we got a huge bullish order block right here. You want to see the sensitivity in the wick, but this price right there is the price of that bullish order block. Okay, when price opens up, it trades down to, right, that 60-minute order block, right? And that order block does its job, and it blocks price, and it rejects and comes back up and closes there. The next candle open, trades down a little bit, pushes up. Then the next candle open, right, trades up, makes a high, right? Then comes over, pushes up, and then closes here, right? And that finishes off that no, that's just a 15-minute. So the hourly candle ain't gonna finish off until all the way over here. This is when the hourly candle is going to finish off there, right? That's finishing the hourly candle. right there. Okay, this candle here finishes the hourly candle. So now you've now on your entry time frame, now you're looking for reasons to buy. You see what I'm saying? On your entry, once you come in here, you're looking now on your 5-minute time frame, you're looking for anything to give you a reason to buy. Okay, it can be anything you choose to trade. We came down, right? We hit this bullish order block on the 60-minute, right? We come back up and we respect the mean threshold. Sorry, we respect the mean threshold twice. Respect the mean threshold of the breaker here on this 60-minute candle. And then when we come over here and close, where is it? Where's my crosshairs? Right, when we come over here, right there, right, when we come here and close that 60-minute candle right there, right, when we close when we close here and close that 60-minute candle, right, what do? We respect the mean threshold of that breaker again, right? Closed above it on this hour, and then we closed above it on the next hour, right? We're closing above that breaker, so we're showing respect for that breaker, right? And then inside there, before we even close, right, we retrace back down into, right, the imbalance there, right? Wick do the damage, wicked over a little bit, came back up, closed above it there. So any entry technique that you're using inside this range right here, it's up to you, however you want to trade it, right? And then once we come out of there, right, once we come back up out of there, you see we just consolidate in here, right? And this is one of them times where we don't get the move down first. We just get the consolidation, the expansion, and the retracement, right? We don't get the move down first in there. Remember I say you don't always get the move down, right? We get the consolidation, expansion, and the retracement. We get the curve that time, right? We get the curve that time because we don't consolidate and dip then go up. We just consolidate, expand, retrace, and then we push up. You see what I'm saying? So that's how you use the 2 time frames apart, right? You're always looking 2 time frames apart, but that's how you use the 2 time frames apart. Hopefully that made sense. Hopefully that cleared it up for you. If it didn't, just ask me again on another day and I'll try to say it a different way. All right, 7:30. That's an hour and a half. Y'all got anything else? Because I sure is hungry. Yolanda, your picture look like you got something to say. What you got, Yolanda?
I apologize today for sounding like I was still outside with these answers, but I appreciate your teachings.
Oh, ain't no problem. Ain't no problem. Where my little friends at? It's quiet right now. You hide in the closet?
No, they at the front yelling. I'm surprised you can't hear them. They dragged me outside like 3 times today playing in this snow. So
Big Tex. They out there playing with Big Tex.
my youngest just said, "Can we go see if he's still up and hasn't melted?" And I was like, "We can go look." And then she told me, "Can we play?" "Ma'am, it's dark. Go back. Go."
Y'all ain't got nothing? All right, man. We're gonna call it boot camp. What's tomorrow? Let me see what tomorrow is. Tomorrow is Wednesday. So boot camp. I'll see y'all in the morning for tape reading. I'm tripping. For tape reading. And then I'll see y'all tomorrow evening, right? We're going to be it'll be, we can make it a Q&A / if anybody want to start talking about an entry model that they're interested in or they're using, you know what I'm saying? We're moving into phase 3, right? We're moving into phase 3, looking at like entry models and stuff like that if you want help with that. Now I ain't gonna just make up nothing for you, right? But if you want some help with it, if you want help with something that you already trying to flesh out, or if you've been trying to do something and it ain't really clicking for you, we can walk through it together, and I can give my input and just do like regular Q&A stuff. And based off the votes, I think that we decided on 3 nights a week, which is going to be Monday, Wednesday, and Friday at 8. For the so that's going to be tomorrow, Friday, then Monday, Wednesday, and Friday, and that will wrap up the boot camp. Boot camp will be done. For those that's in the boot camp that's not part of the gang, as far as the monthly subscriptions on YouTube, you will have access to the Discord until the end of July. Right? And for the rest of y'all got access to the Discord until you decide not to be a member of the gang no more. And if you haven't scheduled your one-on-one, please do so. I think 7 people have. And it's let me check. Let me pull up my Google. Nah, it might be easy if I look in Zoom. I'll pull up my Google Calendar. Right. So looking at my Google Calendar. Right. Show me the month. Okay, so looking at my Google Calendar, that's January, February, right? So we got 1, 2, 3, 4, 5, 6, 7. Right, so 7 people. 7 people have scheduled. Right, 7 people have scheduled. If you don't schedule it, right, I'm just going to assume that you don't need it or don't want it. Right? If you don't schedule it, I'm assuming that you don't need it or don't want it. And then don't have water in your eyes when it ain't available to schedule no more. You be like, Tim, I didn't get a chance to schedule my one-on-one. So sad. Sorry, not sorry. All right, man. I appreciate y'all for hanging out with me. Hopefully y'all got something out of this. If y'all got something out of this, share it with somebody who you think might get something out of this, man. Do all that stuff that they talk about, like, subscribe, and share, and comment, and all that good stuff. If speaking of one-on-ones, if you desire to get a one-on-one, there's a link in the description down there. It's the second link. It's $150. We sit down and chop it up for an hour. I be running my mouth. I end up going over the hour most of the time, but I try to stick to it and be respectful of your time. Right? Yeah. Do that there. Anyway, I appreciate y'all, man. I see y'all tomorrow at 6 for the price action recap boot camp. I see y'all at 9 for the tape reading, and then boot camp. I see you again tomorrow night at. Wait a minute. Tomorrow is Wednesday, so we got Q&A. So I got a busy night tomorrow. I got Q&A. I got tape intraday price action at 6. Q&A with the mentees at 7, and then boot camp at 8. I got a lot going on tomorrow. I can't wait till this boot camp over. Anyway, appreciate y'all, man. Till the next time, I decided to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Gunday. Ain't no more big spot if you don't know Hablo Espanol. Y'all be safe out in these trading streets, man. Gone.